Hi, my name is Francis McDonald, and I am CEO of Lift Power. And Lift is focused on developing hard rock lithium deposits in Canada.
You are. Good to see you again, Francis. I know you've been trotting around the world and talking to all sorts of investors from Australia to Canada as well. So thanks for joining us and making time just before Christmas. Saw the press release, yet again, more high-grade assays coming out of the ground. Tell us about the latest batch.
Yeah, sure. So again, we put out drill results on Tuesday morning, which is the pattern that we've had. So we'll keep doing that going into the new year. And today's highlights were from the Shorty pegmatite and also from the Phi Southwest pegmatite. So Shorty was high grade, 20 meters at 1.52%, I think it was. And so 1.52%, that is quite high grade, and 20 meters of it is pretty significant. And then Phi was another great intersect. I think it was 26 meters at 1.12%, so pretty solid there as well. And we've been putting out batches of between 5 and 8 drill holes on each press release, and I think this is keeping people's attention. We keep putting out good news every week. And when you look at the actual hit rates of our drilling, I mean, we're hitting on probably between 80 and 90% of the holes. And this is because of the uniqueness of the Yellowknife project. We have these outcropping lithium pegmatites where we see spodumene on surface, and we're just drilling underneath these in a systematic fashion.
Right. Okay. So 80 to 90% hitting, and by hitting, you mean hitting grades which you believe are commercial economic, right?
Yeah, that's right.
This is the question for you. You said to me a couple of interviews ago that the kind of secret sauce to this is, before everyone sort of jumps on the bandwagon, is to move at pace, to advance and expedite matters. So talk to me about how you were coming at your drilling in terms of the targeting, in terms of the whole modeling that you're starting to see, which delivers to that expedited theory of yours.
Sure. So I think if you can see what I have up on screen here, this is the drill plan that we were executing this year. And you can see it's pretty systematic. We've been doing 50-meter centers in the upper parts of the deposit. So when I say centers, that's a grid in the third dimension going into the earth. And then stepping out on 100 meters away as we go deeper. So the idea here is that we're drilling off a resource, and this is the first season that we've been up there. It's a bit of a high risk strategy. You go into an exploration project and you say, we're going to commit 34,000 meters to it. But again, it is because of the unique nature of the Yellowknife project, where we have these outcropping dikes and we're just drilling underneath them and defining what's in the third dimension. When they stick out of the ground, we know 2 dimensions. We know the length of it and we know the width of it. And we're just looking to define the depth of it at this point. So that's the kind of go big or go home kind of strategy that we've taken, and we'll continue that in the winter program. We expect to be drilling, I think it's January 7th. We're going to start up with 6 drill rigs again.
Right, and it's quite a big program. You come in and say, go big or go home. Sounds risky. But in your case, you're saying you've got two out of the 3 dimensions, so it's not risky at all. So of the 34,000 meters, where are we at currently?
Yeah, so 34,000 meters has been completed, and we're just gearing up for another 25,000 meters. So in April, we'll have drilled about 60,000 meters within 9 months. So we are putting a lot of meters into this. We're putting a lot of money into it. And this is leading to a inferred resource estimate that we plan to put up around August or September of next year.
Okay, fine. And what does that do for you? And why are you rushing to this end point? Isn't it a Canadian model? Just drill this thing out and work out how big this thing could be.
Yeah, well, that's part of it. I think you need to show people how big it can be, and kind of that resource statement, especially the first one. That's kind of, it's a box in people's mind, it's how big is that box? And there are obvious extensions. We can always go down dip on things, but we need to show people that this is a world-class camp. It's a world-class resource. And then that's the first step. We collected bulk samples for metallurgy this summer. We're going to start the hydrogeology and geotechnical studies this winter as well. And so that's all going to feed into a PEA that will come out shortly after the resource estimate. And yes, we want to make it big, but we also want to show that there's positive economics on it as well.
Okay, so that's kind of critical. That's critical. Why? Because you've got to think about the end game for you guys. Wherever you take that to, you're explorers and have been historically explorers who make discoveries. But again, with that expedited component, you've got to kind of time the market, right? And that's hard. So you're looking around the market at the moment going, well, lithium's come off a bit. The excitement's maybe come off a bit. Is there still the sort of interest in lithium? Do you feel is that part of this expediting matters theory? Do you think there's a point where perhaps lithium's not as exciting as it currently is?
Yeah, well, I think the sentiment is horrible right now, and we were just talking about this before. That it's the rate of change of how the lithium price has behaved, and it's tanked in the last month, so it's down about 75%, which is fine. I think even at these prices, people that are producing any lithium product, whether it's spodumene concentrate or lithium chemicals like carbonate or hydroxide, people are still making a lot of money even at these prices. So the massive increase that we saw in the price earlier this year and last year, I mean, those were windfall profits, and that wasn't sustainable. So yes, there is a extreme negativity in the sentiment right now, but it's still happy days for lithium miners.
Well, let's talk about that, because I'm kind of always interested in the commercial imperative for companies. Obviously, like you're, I guess, an exception to the rule in the sense that one, your timing was good in terms of your entry point and the ability to raise money as you did then and recently, and what you're doing with it is allowing you to move at pace. But the end point is where people realize the kind of that upside. You've got Albemarle have plowed money into Patriot. You've got SQM making bids on very early stage projects like Azure in Australia. Do you think deals like that are still possible, or have we seen the best of it?
Oh, I think they're still possible. And just kind of getting back to a previous part of your question that I don't think I addressed, I think that the timing and the sentiment are bad right now, but this is like any commodities market, and the money starts to be made in the bottom of the market, because this is where you sow the seeds, and this is a perfect time to be buying lithium stocks, because I don't think that the long-term supply demand dynamics have changed. The EV sales are stronger than ever. It depends whose numbers you're looking at, but maybe we've gone from 30% compound annual growth to 28%. And so you're maybe down slightly, but that doesn't change the trajectory that we're going. And so to me, this is a great time to have some cash in the bank, advance projects as quickly as you can, and get ready for the next leg up in the lithium prices, because it will come. And I think that because the lithium market is such a juvenile market, we haven't needed lithium in these kind of quantities before. And I think we're going to see extreme volatility over the next decade or so. So that's kind of the strategy right now. Just put our heads down, advance the project as quickly as we can, get ready for the next leg up. And at that point, if someone came out and gave us a great offer that we liked and it was the right time, you could see us potentially taking it. But we do have the team in place that we can advance this all the way to construction, and so we'll just keep pushing ahead if it's not the right time and it's not the right number that we're looking for. Okay, and obviously it is the right time to go out and buy lithium stocks, but not all companies are born equal. So, in your view, what is it that these larger mid caps, larger companies
are looking for? How do you paint that picture? How do you sort of put a bow on what it is that you are in comparison to what it is that they're looking for? How do you marry those two things?
Sure.
What can you do?
Thanks for keeping me on script. I keep answering questions from your previous one as we go. But I'll continue to do that and try and tie it into what you just asked. But in terms of looking at M&A in Australia, so it's one of the hottest places right now. Like you mentioned, Azure, and we've seen what happened with Liontown, where Gina Reinhardt came in and blocked the sale to Albemarle. And I think when you look at Australian companies and lithium assets, especially with the environment and the dynamics that have been playing out there, they look pretty expensive. And I think it's only a matter of time until that M&A appetite comes to other places like Canada. And to me right now, I think there's three main places that investors are looking at. It's Australia, Brazil, and Canada. There are some big deposits in Africa, but those have challenges from a jurisdictional standpoint, but also from an infrastructure standpoint. And so those are the jurisdictions that I think you need to look in. So if things are expensive in Australia, that really leaves two places to go out and look at other assets, which would be Brazil and Canada. And so how do we tie a bow on it? I mean, I always come back to this is there's two main things, and that's the resources that you have on the ground and then the infrastructure. And infrastructure is incredibly important for these deposits because it's not like a gold deposit. It's not like a diamond deposit where you can just fly the product out on an airplane. These are bulk commodities. And just to give a sense of this, so it takes about 8 tons of ore of lithium pegmatite to make a ton of spodumene concentrate. And so if you have a 100 million ton deposit that you're going to mine, that's about 12 million tons of spodumene concentrate. And I'm not sure if I've gone through this with you before, Matt, on these interviews, but I had to do the math on this. And what does 12 million tons actually mean? So this is like filling Sky Dome. So this is the baseball stadium in Toronto. It's from the field all the way up to the dome, all the seats in the stadium. So you fill the stadium 5 times, and that would be the equivalent of 12 million tons of spodumene concentrate. So when you think of it like that, that is a massive amount of material to be sending somewhere. And if you don't have infrastructure, it's going to be incredibly hard to do that. And so that's why I say infrastructure and resource potential are pretty much in the same boat. And infrastructure actually might be even more important than how much lithium you actually have in the ground.
Interesting. Very, very interesting. Well, like I appreciate you kind of spending a little bit more time with me on the kind of commercial realities, because I think I was talking to the CEO last week, and he said, the most important thing for us is very quickly, answering a couple of questions around the economics and the saleability, in terms of what it is that they've got into the market. So size doesn't, as you say, size isn't necessarily kind of key driver. It's about, can you make money and margin, and good margin at that. So, look, okay, well, good man. More assets coming out soon. Is that right?
Yeah, that's
Every
right.
week?
We have we've got about 100 holes
Good man.
left to release to the market. I think we've increased this to 8 per week. So, we'll have some pretty steady news flow until we have new results coming out from the Witcher program, which is starting around January 7th.